Good afternoon, everybody. Hope you can hear me okay. And Juliana, thank you so much, first of all, for traversing the globe to be here, and also for those remarks which have set us up very, very well. In this, as in all of our panels, we're going to grapple with a really, really big topic, our financial well-being, but we have an excellent panel here, a lot of expertise on the stage, and we'll aim to make best use of it. This topic of financial well-being, as Juliana has said, is one that is gaining momentum at an international level as a new lens through which to assess our financial system and how it is delivering for the users of that financial system. And work is underway at an international level, including with the OECD, and we have some of our colleagues from the OECD in the audience today. The Central Bank of Ireland is involved in that work and very, very committed to that work in order to develop that wider concept. And of course, for us here in Ireland, this sits very comfortably within the government's overall wellbeing framework, which was announced and launched by the Taoiseach. And as Sonia said, later this week, we will be hosting the FinCoNet annual general meeting with delegates from consumer protection regulators from, I think, 42 different jurisdictions here. I think also representing over half the people on the planet, if I understand that, if I've got my maths on that correct, and growing. So I think it's only right, maybe, Juliana, just to start with you. We've been talking a lot about geopolitical fragmentation and the strains that are on the international multilateral system. What do you think is the role of international organizations in relation to financial well-being and the topics that you spoke to in your opening remarks there?
Okay, thank you for the question. And again, thank you for the invitation. The OECD has the high-level principles on financial and consumer protection. There are 12 principles, and they are available not only for the countries that are member of the OECD and G20 that have endorsed it, but also to other countries. When we think of an economy that has no boundaries, no frontier, no borders anymore, it is more digitalized. So it's not enough anymore to protect only the consumers that are within our jurisdictions, because the system is accessible to everyone beyond our borders. So if we have principles that guide all the jurisdictions to have the same care, the same orientation to all consumers, we are going to protect our consumers as well, because they go beyond our borders. So international principles that guide the action initiatives of the entire financial system of the entire globe is crucial to protect all the consumers. So what FinCoNet does is to bring these principles into really daily life, into action. So we transform the principles into regulation, into tools of supervision, how to do it. We share case studies, we share expertise. We have countries from different sizes, from all over the globe, so we can learn from each other. And the risks and the challenges are the same. I'm sorry to say that, but they are globalized. Not only the access, but the risks are globalized today. So there is nothing better than learning from someone that has been facing this challenge. So international standards are crucial to protect our consumers, despite they are within our jurisdictions, and having this dialogue that allows dialoguing and learning from other jurisdictions, other central banks or supervisors is also crucial to anticipate the risk and being better prepared to protect our citizens.
Thank you. And actually, so international standards, and I just say, I see John's eye there in the front. So we will keep our CEOs happy, at least with international principles, if we can work from those. And I know, Magda, turning to you, welcome to the panel. I'm going to stick with that international theme because amongst the many roles that you perform, you are, of course, the chair of the International Network of Financial Educators, which is education, which is another OECD forum looking at one of those pillars that Juliana mentioned, and I think comprises about 300 public institutions from 130 countries. So you've been involved in this field for a long time. In Ireland here, we've just launched a national financial literacy strategy, and we have an EU one as well. So I'm really, really interested to hear your views on the role that financial education can play, particularly into the future, given the landscape that Juliana has described, which has changed quite a lot, perhaps, from when we started out on the financial education journey.
Yeah, really a lot. Thanks a lot, and thank you for the invitation in this amazing setting, I must say, and this wonderful day here in Dublin. So maybe let me start with putting financial education within the wider context of the evolution of the financial well-being context that Juliana drove us through, because I participate, I'm co-chair also of another group, a G20 group, which deals actually with financial inclusion, the Global Partnership of Financial Inclusion. And this leads me then to financial education, because actually this focus on financial well-being is really part of a journey where more and more we realize that access to financial services, starting from the basic access, having an account, and now having digital accounts, digital financial services, is certainly essential to participate in economic, even in social life, more and more, because we know that this access brings a lot of opportunities. Now, we focused on basic financial access, having at least an account, over the last 15 years, certainly with this G20 group, because it was considered as essential to get into financial, economic, and as I said, social life. Over these last 15 years, a lot of progress has been made. In emerging countries, now access to financial services has increased a lot. There is an international survey called FinCoNet that shows it. In developed countries, and especially EU, is basically universal. Basically, almost everybody has access to an account. But over time, and especially recently, as Juliana was saying, we realized that access alone is not enough. And in fact, we even observed that digital access brings about a number of challenges. So we have the evidence that to have real benefits to final users and instead limits these challenges, which are related, as she was saying, to many frauds and scams in digital payments, the risk of over-indebtedness, the risks of digital exclusions, the risk of discriminations due to algorithmic analysis and so on. We really need to move forward from basic access to usage, but also to quality inclusion in the financial services, whereby actually products and services are those that are actually really useful to consumers, to users, and users use them in a responsible way. And we realize more and more that the policy conditions to ensure this are actually consumer protection, an effective system of consumer protection, and an effective system on financial education. And more we realize that to make sure that these two big policy areas are effective, we need to measure their effectiveness, and in the end, to measure the increase in financial well-being. Now, we can move to financial education because it's a big part of this story. And we are realizing more and more a lot of evidence has been produced over the last few years about the importance of the impact that a greater financial literacy of the population has on many variables that affect financial well-being. It is certainly associated with higher probability of savings and planning, and Juliana was telling out how this is important for individual financial well-being. It is associated with bringing up responsible debt, and we know how digital debt is bringing about lots of risks. Let's think of buy now, pay later or other digital instruments. It is associated with a greater participation in financial markets, a responsible one. It's a big thing in Europe at the moment. It is associated with being less exposed to frauds and scams, to greater pension planning. It is even associated with greater active citizenship. We do have evidence of the fact that countries where financial literacy is higher are countries where reforms, financial reforms that appear as painful, like pension reform sometimes, bring about less cost in terms of electoral results. So that means that having higher financial literacy allows citizens to evaluate better even policies. So that's very, very important. And certainly, there is evidence that higher financial literacy is associated at least with one of the components of financial well-being. As Juliana was saying, we now have a definition of financial well-being which includes at least 4 components, as she was saying. At least one is the one referring to resilience, the capacity to face temporary financial shocks. And we do have evidence, again, that higher financial literacy is associated with greater resilience. Let me mention a counterfactual exercise that we did in Italy, where we have actually a very low financial literacy of the population. If all the population in Italy had an adequate level of financial literacy, and adequate, I don't define it here, it's based on the OECD standards. We have a lot of measurement with the OECD. Well, if all the population had an adequate level of financial literacy, the capacity to face unexpected temporary shocks, that is, their resilience, would increase by 25%. Of course, these are heroic exercises, they are counterfactuals, but they show the potential of increasing financial literacy across the population. And let me mention that within the OECD survey, we have a survey on adult population, on financial literacy of adult population. The one that we are performing next year will include a number of questions specifically on financial well-being. So we're going to measure it more effectively, and we're going to be able to measure better the correlation between a lot of financial literacy variables and the impact on financial well-being. But as Juliana was saying, we also have a lot of evidence of the macro impact of greater financial literacy. Effectiveness of monetary policy, we have evidence produced by the European Central Bank, the stability of financial system, investments in the financial market, which is really important in Europe for the Savings and Investment Union. Hence, well, we have by now a lot of evidence of this. We have a lot of best practices coming from this international organization, the International Network for Financial Education. And this means that financial education really complements consumer protection. Actually, it is somehow instrumental to make it work better. If citizens know some of the protection tools, for example, redress mechanisms, they make them work better. So even consumer protection works better. So both together are really instrumental to increase financial well-being of the population.
Thank you. Thank you very much. I think we've heard, we've been speaking a little bit today, and we will this afternoon as well, about the enabling power of technology. And I know, Ronan, you're going to talk to that a little earlier, but I think that's a very compelling vision of the enabling power of international principles and financial education in terms of unlocking what financial services can deliver for people and the economy. And so, Maria, if I can turn to you, very welcome. The Money Advice and Budgeting Service is an organisation we interact with a lot in the Central Bank of Ireland, and you're very much on the front line of the consumers and investors we've been talking about and their experiences. So, listening to what you've heard and what you've heard over the course of this morning, what's your perspective on what you've been hearing here today?
Thank you for the invitation. I'm delighted to be here. I've worked in the area of working with people with financial difficulties for over 30 years. So I do have a lot of frontline experience, and I do have a lot of experience of working with to support advice staff in their role. Speaking about all of this strengthening of financial resilience and financial education, financial inclusion, we can only help to protect consumers. That can only help. It can only strengthen what we've been trying to do for a number of years. MABS has been working in delivering community education programs for 30 years at that local level. But I will say that it only can go so far. And inevitably, there are people in life who things just will go wrong before. And we do see people who had savings and then use the savings to try and get themselves out of financial difficulty. We're seeing more people now who are being scammed. We're seeing coercive control and financial abuse. We're seeing a whole range of different things. So with all of those strengthenings and the value of all of those things being put in place, we still need to take care of people when they get into financial difficulty better. And what we see happening is that sometimes they get treated badly. They get treated like loan books and accounts and portfolios rather than people who are your family, your neighbour, your partner in your community. So I think we need to do better. I think we need to supervise the arrears handling side of things much, much better. And I think we need to hear from people who are in financial difficulty and their experience of it, because the relationship and the journey is long. And if people are supported well when they do hit if they do hit financial difficulties, if they're supported well, the relationship can continue afterwards and they can take part in community and economy again. So, the mix, as I see it, is the mix is financial education, avoid the debt, save if you can to minimize the extent of debt if problems hit, but people do live in low, inadequate incomes. We are looking at the economy, we're looking at household expenses going through the roof, we're looking at rents increasing, we're looking, mortgages. So all of that we have to be mindful of, but more importantly, look after people when they're in financial difficulties. And if debts are being sold on to non-bank entities, which that happens a lot, can we map the interest rate at least that they had before it was sold on? I think there's nothing worse than somebody going through absolute hell. And there's plenty of research out there to show that people go through absolute hell when they're in financial difficulty. So, can we have protections when they're sold on? And not have the interest increased instead of when it should actually probably be reduced? Can we have more options available to people? Can we have insolvency measures that people can afford to avail of? Many people can't afford to take an insolvency measure. So, I'll stop there now, but there's a lot we can do. And one final thing, could we have account statements, loan account statements that actually make sense to consumers? That would be fabulous.
Thank you. I think I'm hearing everyone in the room kind of agreeing with that one. Thank you. Thank you very much, Maria. And you, as ever, I always find it talking to colleagues from MABS, and I've sessions with your local advisors as well. You have a great ability to put the concept of financial services and what it means for people in that wider social context, because these things don't happen on their own. They happen within a context for the household that's going through whatever they're going through. So thank you. And Ronan, just in our first round of questions, we've heard about Savings Investment Union, for example, as an initiative. This we've spoken about sort of enabling, unlocking the potential for people, as well as the need to protect them, as Maria has said. In your view, from your experience in industry, what do you think we need to do to unlock the potential of financial services better for consumers and investors?
Yeah, look, I suppose thematically we have heard a lot about the Savings and Investment Union and the goals of it, which is really to say, we've got these really stubborn set of deposits here, by retail investors, and we have these productive investments that we're trying to match up over here, but we don't necessarily have the infrastructure to bring those together. And I think that is very true. And I think we've gone at it a number of times. UCITS should have helped, probably, more than it has. It's been a very successful regime, but it hasn't credibly unlocked retail deposits. Pan-European pensions as a supplementary tool, again, haven't really done what was envisaged. So I think with the retail, I still call it the retail investment strategy, but the Savings and Investment Union, there's definitely some design choices there as to, what elements are going to be passive and in terms of participation, and how much active participation we need from retail investors. So if we kind of think about, auto-enrollment, and supplementary pensions, voluntary pensions, it's a passive way to move money into these vehicles, which again is good. On the active side, active participation, encouraging people to invest in capital markets, it's quite a big challenge. And I think, we talk about simplification, and sometimes simplification is inherently complex, So to get to simple is a complex task in its own right, particularly when we've 20 years of regulation to amend and adapt, etc. So, but, fundamentally, savings and investments accounts that are, understandable by retail investors, that are goal-based, should be beneficial. So if I think about, in Ireland, we're now looking at the first real set of intergenerational wealth distribution, and we're thinking about, well, we now have a bunch of young people who need to save for education. How do we create accounts that link that finite goal, which might be in some cases a 5-year goal, sometimes a 10-year, sometimes a 20-year goal, and make them tax efficient, make them attractive, and make them available. And I think, that should allow probably the first real sense of goal-based financial planning. So what we have in the industry, and particularly in the wealth industry, we have a bell curve of wealth. We tend to have very late stage accumulation, then people moving into decumulation, okay? And a well-advised sector in the middle, And I think to Maria's point, we have to be interested in the shoulders of that bell. So, as people are entering the financial system, how do we make it understandable? How do we make it beneficial? And how do we have a bit of incentive, which is probably going to be delivered by incentivized taxation to get people into the capital markets? And similarly, we see people living longer, needing to stay in risk assets longer. So how do we encourage people to keep those assets in markets? And how do we design products to do that? Because again, quite often now we are seeing people who have, large amounts of wealth accumulation, but, throughout Europe, we have a housing problem. It's not unique to Ireland, and sometimes, there's a need to see that transfer of wealth from here to here, So I think well-designed products that meet the known financial goals and problems of society is what we should be looking for from the Savings and Investment Union to trigger that active participation. I think that's really, really important.
Fantastic. Yeah, no, that's I hadn't myself come across that goal-based approach before, but it resonates, I think, very strongly with what we've been hearing from the panel about having the right options available for people that you can actually bring them to. And I'm going to try and build on that round of applause that you got there, Maria, to open it up to the floor and see if anyone would like to ask any questions. We do have things here in the Slido, but I do just want to bring people in from the audience. There's some roving mics. A lady up here. And if people can just give me your name and for the benefit of the panel, and if you're here from an organisation, who that is, just to help the panel. Thanks.
Hi there. Hello? Okay.
There we go.
I'm Deirdre McCarthy, so I'm a financial literacy educator. So this is absolutely the panel that I love. What can Ireland, who has just launched our financial literacy strategy, learn from good international practice?
Thank you very much. Anyone want to have a go at that one? Ray, you're at that front line. What do you think in terms of how would we best target it? Where would you go in terms of raising literacy? And then maybe Magda, as our resident expert on this particular topic, I might ask you to come in.
No, you can go ahead. International best practice, I think, is probably more your area.
Okay. Yeah.
Well, international best practices, I think we've touched a very essential topic because I think at the moment this is exactly the challenge in financial education. We have, financial education receives today a lot of attention. It's, given the empirical evidence that I mentioned, but it's also politically very relevant almost everywhere, I would say, as Colm was saying, in the International Network for Financial Education, we have around 130 countries, so it's really a hot topic. But we have, and many countries have a national strategy. They're building a national strategy, Ireland as well. But what we have, we in national surveys, we still see limited improvement overall. And overall, we also have limited use of evaluation of programs and projects. So the big issue is what is working, really. For schools, so let me separate more specifically. For schools, we do have evidence. Then when it becomes somehow compulsory in the curricula, then it matters. We have teachers that typically are good in teaching. They have pedagogic competencies. So when they get trained into this topic, sometimes they are not, so you need time to make them train, then it works. And we have evidence that when it's inserted in curricula, then it improves the competencies of kids. For adults, it's really complicated. We have much less analysis of the pedagogical approach that works for adults. We know that there are a lot of resistances, prejudices against finance, against money issues, and so on. So we know that we have really to work on this, to work, first of all, on these resistances, on the prejudices, and they vary across segments of the population. So we need to understand this. We need to understand the specific needs of different segments of the population. They are not the same. Women are different than men, elderly are different than young, migrants, different sorts of segments of the population really have different needs. And the behavioral problems that all of us have to be addressed. So on this now, there are some experiences. I can tell you about some of our country experiences. We have developed, for example, programs for women. We have a program which is called Women Counts. And we are focused first on reducing the typical resistance that women have, that they think not to know, or they think they can't address this. So you have to destroy this prejudice, this stereotype first, and then you have to address specific topics in a very concrete way. This is an example. We tested this with a program with an econometric technique, which is randomized controlled trials, and we verified that it worked. We have, various other programs, but let me mention another. We will open up a museum for finance, money and finance, and we experienced an exhibition on that. It's an immersive museum which involves people not in a one-sided way. People are really involved in a simple and involving environment. And again, we measure the impact for students participating in this experience, and we found that it mattered. It produced a benefit, and it produced a benefit which was even larger for girls than for boys, given the methodology. So there is a lot to do. And actually, within the INFE, the International Network for Financial Education, we just started an inside working group on what works. And the subtitle is, and what doesn't work. Because we really need to understand what we are doing, what it matters, what produces results. Because it is costly to do these programs. So we have to challenge, to devote our resources to what really works. So exchanging best practices, making sure that things really work is essential. We need a lot of piloting and a lot of measuring, but that's the way, I think.
Thank you. Maria, I might ask you, actually, I might target the question a little for you in one way. It's something that's very close to my own heart, what you mentioned, which is educating people about their rights, for people to understand the very strong rights that they have.
Yeah.
Any insights that you have in terms of how well do you think consumers in Ireland know about their rights when it comes to financial services, and what could we do?
I think it'd be very difficult for them to understand their rights. I was here when the 1995 Consumer Credit Act came in, and I was delighted to see it. And then over the years, it's kind of evolved and grown and layered upon layered, and then sort of it's got very complicated. And even now, it's got bigger now. The 2026 version coming in is even bigger because it includes the Code of Conduct, mortgage arrears, etc. So the Competition and Consumer Protection Commission and the Citizens Information Board, there is some good information out there about consumer rights. I mean, that would be where they could look. But I do think a lot of the community education or money management education events or sessions delivered locally are very good because you're working with people maybe one-to-one and you're getting to understand what it is that they don't grasp or what it is that they need to know. So I think that's, it's a way forward, the face-to-face, the community-based financial education and consumer rights type training. You talked about accreditation for delivery. I think that's really important. And I think also it's really important for us to test what's working. And, we need to be looking at point in time education programs. So it might be you're in transition year. We had the Global Money Week, 2,600 students in school received sessions around that whole area. There's about another few hundred local education sessions happening, but we really need to evaluate them more and learn from them what's going well and what isn't working so well, and get very, very strategic about how we reach out to people who are being left behind. Not everybody is digitally capable or has digital access. There are people who have neurological difficulties. There are, other disabilities, learning difficulties. There's a whole range of people out there that we need to try and accommodate. But we all, for sure, all of us need financial education.
Thank you. And actually, I'm hearing some really interesting resonances between this and the earlier conversation about simplification, targeting, cost effectiveness from a different perspective. And Juliana, I'm going to turn to you in terms of the Brazilian experience, because when we spoke ahead of this panel here, you were telling me a little bit about what you're doing in Brazil and the role that your organization performs, which I thought was interesting.
Yes, thank you. Well, as Magda said, the financial education takes a big part of the equation. And first of all, just catching the last question, I believe there is no single organization responsible for educating the population. So we need to have, because we have different layers, so we have schools and we have elderly and we have different people, we need different organizations. So I'm the head of market conduct supervision under the Central Bank of Brazil. So under our competence, what we have decided to do, we have a big part of a role in the national strategy of financial literacy, and we work with children's co-curricula and some kind of services for the entire population, but we have decided to work specifically with financial education for clients and users of the financial systems. So we took a very different path. We decided to regulate it and supervise it. Because when it comes to adults, and it's really hard to measure, we have acknowledged that adults need the teachable moment. So when they need the product and they need the service, they don't come to the Central Bank of Brazil. They go to the financial institutions. They rarely go to a counselor. Maybe they don't have the knowledge and the awareness to go to a counselor. They go to advice for their financial institutions. So that's the moment, the critical moment to deliver the financial education, that piece of financial education for that adult that is in need. And we don't have the resources enough. We have 95% of the population that is financially included. We have continental dimensions. So we don't have how to be at the moment that every adult needs some kind of advice. So we share this responsibility with the financial institutions, not only the banks, all the financial institutions. And to avoid that financial institutions take advantage of this very vulnerable moment, we have decided to regulate it and to supervise it. So financial institutions can be sanctioned if they deliver the wrong or they cause some damage during the journey of the client for when delivering the financial education. I know it's a very innovative path. We were talking about simplification and the regulation, and we took the other role. But we consider that regarding adults, regarding the need to be there, and who is there is the financial education who decide to do it. It's a very new approach. The regulation was published in December 2023. During 2024, financial institutions had the time to adjust and to implement their first layer of financial education programs. I say programs, but they're very different initiatives and actions. In 2025, it was the first year that we really supervised these institutions. And the results are quite interesting. Yes.
Very good. Well, I look forward to hearing more about those interesting results and monitoring that approach in Brazil. Deirdre, thank you very much for that question. See, is there another question from the audience, from the floor? If not, I have here's a good question. Framed in the context of the CCA, as Maria said, the 1995 CCA brought clarity to consumers. How can the Central Bank of Ireland ensure clarity without introducing new legislation? I don't know who's being asked that question. I fear it's me, but I'll abuse my position as a host just to see any views just on that question of how do we bring higher standards in this space without over-regulating. And I'm sure that's been on your mind, Juliana, as well, is that, the last thing in the area, for example, of financial education you want to do is slow down good initiatives that are there because people are afraid to launch them because of regulation and getting that right. Ronan, you've a good experience over the years of regulation and being regulated. Do you have any insights in terms of how we get that balance?
And I think that is the main piece. Like, it is a balancing act, So I think, a lot of important financial needs are trigger-based, So you can only educate so much. And we had the famous advert in Ireland for people who aren't in Ireland, where the man standing up saying, "I don't know what a tracker mortgage is." Pretty much everybody now knows what a tracker mortgage is, through a mix of consumption and education. So really, when you see that playoff between education and consumption, it's, how much of it is going to be advised and how is it advised, And I think, we do see good evidence of new entrants into the market, who have used technology well. So, for example, how to support your children, your teenage children financially, how to teach them good habits, And again, these are usually, digital plays, from digital-only businesses, And the question is, look, how do you move that forward? How do you make that broader? And how do you make sure there's financial inclusion as part of that, So, there is an element where we look at the practices, which are often through products that new entrants are coming. And there's this, slow realization of the incumbents industry that actually there's bits over there that I really, really like, And I think the same is true for, the whole DLT space, Like, there's elements over there where people have left it as a curiosity, And I've worked in, all sorts of, retail financial services, as well as, spending the last year primarily looking at the digital asset space and trying to pull that back as to how it would work for, ordinary investors. But there is a real sense, and I think if we're even talking about the goals of the Savings and Investment Union, where you have a digital ID over here, and you have some investments you want to go into over here, the linking up of those things is probably more easily done than people will consider, when they look at, the sort of rails and ability you have to do that. And you're already seeing that a little bit digitally at the moment. So I think, there's a huge concern over everything going all digital. And I think the question is, in a rural debanking environment, how much can, some of those entities that are doing well in rural debanking, credit unions, the post office, how much can they rely on having, almost point-to-sale type interfaces, face-to-face interfaces, where they're still maybe plugging into the same APIs in the background. They're getting digitally serviced there, but, they have that protective layer. And again, I think that may be how, for example, I think we talked about how do we get retail investors into the sort of investments that we want in Europe, which is to foster innovation. Well, you can't put them into, a 100 grand investment, but can you put them into a tokenized investment? So I don't want to steal the thunder of people later, but, how do you rebuild Ukraine? Well, nobody's going to put 100 grand into a fund that's very, very volatile. How do you invest in a public-private partnership? Well, possibly with much, much smaller amounts, that are well diversified, And I think that technology, is just going to take a massive jump and a massive, I suppose, exposure to people. I think, a lot of it will happen probably more quickly than the industry anticipated.
Thank you. Well, thank you. And given it was, how can the Central Bank of Ireland ensure clarity without just introducing new legislation? Maria, I'll ask you. I won't ask our international colleagues maybe on that one, but I'll speak to it in a moment. But Maria, yeah.
I think sort of Olaf's mention of the octopus this morning was mentioned a few times. And I think it is all about, the reaching out, the collaboration. We have a lot there already. Let's see how can we make it work better. One area that springs to mind is the area of the customers in vulnerable circumstances, and how can we support them. And I'll give you an example of where I live up in the west, the northwest. There's people are experiencing problems with mortgage arrears and living in homes with defective concrete blocks. It's an expanding problem. It's in the west, it's in the northwest, and now it's in Limerick and Clare, and broadening out. More recently, I'm hearing it in other counties. So I think sort of the definition of vulnerable customers or people in vulnerable circumstances could be applied to a class of people like that who are going through difficult circumstances. We're about to publish a report shortly in that topic. But or even maybe I even go as far as saying vulnerable customers are people who are in financial difficulties, because there, like I said earlier, there's much research about people and the suffering that they go through when they're in multiple over-indebtedness. It's linked to grief, and people can be going through life events at the same time as dealing with complex multiple debt and their homes being at risk, etc. So if you're going through that, the psychological effects can mean relationship breakdowns, it can mean ill health, it can mean suicidal ideation. These are serious issues, and maybe we should broaden out our definition to include those as a class of people and work together in that.
Well, OECD colleagues who are in the room, this will be music to their ears, because one of the great reforms in the last G20 OECD principles was to do exactly that, which we've, and for those of you who haven't spotted it yet, we have broadened that definition now in our Consumer Protection Code, which will come into force in March of next year. And it would be unfair if I didn't actually ask the question, which I think was asked for me, as to how the Central Bank of Ireland will do this. With that area of vulnerability, what we decided to do was to have a wider industry and stakeholder workshop as an experiment in just this, to see how can we help bring the clarity to some of these topics without constantly introducing new rules and requirements and things coming out of the Central Bank of Ireland. And as I said when we were opening that workshop, which I was very, very pleased with how it went, increasingly we are facing issues where it's really about how we collaborate with each other. It's really about, I think, not the regulator positioning themselves, I suggest, as having the answer to the question, but the regulator positioning themselves as the holder of the standard, and to convene people in the conversation about how can the participants take that standard and raise it, because it is our experience that the likes of yourselves and MABS and industry will have better examples and solutions, for example, in the area of vulnerability than we might have as regulators. We're just coming up on our time there, but I was given instructions starting into this that I'm to keep this going until the Tánaiste that arrives. So always the words you want to have whispered in your ear as you step up on a stage, but I'm getting positive signs from over here, so we don't have an infinite amount of time left, but we have a little bit of time left. I'll just see if there's maybe one more question from the audience before I try and wrap up with the panel.
Thanks very much. I'm Gráinne Griffin from the
Hi,
Competition and Consumer Protection Commission. Just to say thanks very much for the panel, and I think it has been really interesting. We are tasked with the development of financial education in Ireland, and we've really enjoyed the work we've been doing to date with the Central Bank in terms of the rollout of the financial literacy strategy. Just to say that I think one of the big challenges is that piece about retail investors and where do we go with that. Like we provide comparative advice to consumers on financial products. Excuse me, and I can bring consumers in and point them to our website, and they can see, for example, what's the best mortgage rate or what's the best saving rate that's suitable for them at this point in time. But at the moment, we can't do anything similar in terms of investments. And that pathway into an advisor or into the right product for you is something that I do think we need to, in terms of industry and state bodies working together, really kind of conquer. And so I suppose I would just put it to the room to say we will be reaching out to people through the work of the strategy and on behalf of the CCBC over the next year or so to think about what can we do to provide those pathways to consumers in Ireland that will lead people into a way where they can invest in products that are more appropriate for them, develop their pension funds and develop their broader resilience into the future. So thanks very much.
Thank you, Grania. And I think that's speaking very much, Ronan, to what you. So I'll do one final round. Ronan, do you want to pick that one quickly, and then I'll just get some final remarks.
Yeah. So there's definitely a sense that we are underserviced in that area. I think, like most developed advice networks, we have advisors who focus on that bell curve of wealth. The wealthy sector in the middle, and we don't have a huge amount of direct-to-consumer pieces in Ireland. Now, going back to the retail or savings and investment union. The idea of having, savings and investment accounts that are tailored, should be a solution that we should be leaning into there. So again, they are quite often thematically, produced investment accounts. So, if you want to invest in a social good piece, if you want to invest, with appropriate diversification, but within a region you understand, or if you want to invest in something that might produce an outcome in 5 years, 10 years, 15 years, without you taking all of the responsibility, without the benefit of an advisor on the risk, that's what you'd expect to come out of savings and investments accounts. Well-curated products that feel like products as opposed to services that will deliver, as predictable as possible outcome over a finite period, I think is what we should be looking at.
Thank you so much. And I think we are now just at our time with our next speaker. So maybe Juliana, I'll give you the first word, give you the final word. Any final remarks in terms of the future of financial well-being for consumers and where you think you're at? Are you optimistic, positive, pessimistic? How do you feel?
I am very positive, but I need that more people need to be conscious about it. So we really, it's always a mantra that I have. It's a collaborative approach. We need everyone in the room. Only central banks, only regulation, only governments are not enough. We need civil society. We need the financial institutions, and we need academia. So I am positive, but we need to have all the hands at the table at the same time.
Thank you. A fantastic place to finish. So just remains for me to thank our panel. Thank you, Juliana. Thank you, Magda. Thank you, Maria. And thank you to Ronan. That's been really, really useful. Thank you very much. Give them a round of applause. Thank you.